So Apple's flying high today, and it's primarily due to the announcement of a stock split. It's up over 7%, worth about $412 per share right now. This will only be the fifth time in company's history that it's actually splitting the stock, the last one being in 2014. Now, the first stock split was back in 1987, and if you had one of those shares right now, it would be worth about 56 shares, or $23,000. Now, I don't assume that you own many of those 1987 shares. I hope that you do. But if you don't, I hope that you at least took advantage of some of the dips that Apple has seen recently over the past 4 months or so. Hey everyone, this is Sam, and today is all about Apple, a company that I have heavily invested in over the past 8 years. I have investments in Apple in my Roth IRA, in my personal IRA, and also just some individual stocks that I've purchased. Now, it's been a long time since I've actually published a video on here, and I'm sorry about that. I've just been so busy with different house projects, and I've also just started a new job a couple weeks ago, so I'm still getting familiar with that and spending a lot of time getting to know, the new company that I'm working with and just getting involved with that. The new company I'm working with is definitely a smaller company than what I just left, so I'm looking forward to kind of seeing what the differences are. I'm still able to work from home, which is very exciting for me, so I'm just kind of looking forward to being back with you guys and starting the new position. Now, if you find anything that I go over today valuable, definitely hit the like button and leave a comment. That will really help to go ahead and kickstart my algorithm again. I know I didn't have a ton going on before, but this will just help my channel so much. So Apple is a company that everyone is familiar with. Either you love them or you hate them. You definitely know what they're selling. They're selling hard goods like their phones and tablets and computers, but they're also selling soft goods like Apple Music, Apple Pay, and everything in the Apple Store. Now, I personally got started investing in Apple about 8 years ago just because I was looking for something to put my money into that was going to pay me back a dividend, and also a company that I was familiar with. I've definitely taken advantage of buying during the dips and then just continuing to hold. I've never sold any of my Apple, but I have made a quarterly dividend every single quarter for the past 8 years, which has really added up to a few $1,000s just for holding the stock. Over the past 8 years, I've accumulated 65 personal shares that are just individual outside of my retirement funds. So I'm definitely continuing to hold those. Here in the next couple weeks, this is going to be splitting, so I'm going to actually own a lot more, but the value is still going to be about the same. The last time that I did buy was in mid-March. It was about March 12th is when I made a large purchase for some of these shares because Apple had seen such a large dip, as many companies did. Ultimately, I own these shares outside of my retirement accounts because I wanted to have some kind of investment that I can touch before I turn 59 and a half. Because at 59 and a half, you can go ahead and start using your retirement accounts without the huge fees. So before that, I would be paying a 40% fee on anything if I went into that retirement account and pulled it out. So I wanted something outside of that that's going to allow me to possibly retire even earlier than 59 and a half without paying these huge fees. Now, if you've been thinking about investing in Apple and you just haven't been able to because it's too expensive, you may want to circle August 24th on your calendar. So this is the date that Apple is going to be splitting their stocks 4-to-1, meaning that for every share that you own right now, you will now have 4 shares. The important thing to understand here is how this affects current and new investors. Current investors will receive 4 times the amount of stock that they currently own. Now, if you own a $400 share of Apple today, here on August 24th, you'll own 4 shares of Apple worth about $100 each. Now, why does that matter? This is going to give new investors an opportunity to invest in a company like Apple without forking over $400 for every share that they want to purchase. This is opening up an opportunity for so many new investors just looking for different ways to make short-term gains, long-term gains. I don't believe in short-term. I feel like that's a terrible strategy, but there are going to be a lot of people that are going to be doing that. If this goes well and new investors do hop on this opportunity to purchase the stock at $100 a share, then I would expect that $100 to increase, meaning that everyone's going to be making more in unrealized gains. This will increase the value of the current investors and the new investors alike. Now, if you have the funds available right now where you are looking for an opportunity to invest a few $100s, maybe a few $1,000s, it may be a good idea to invest in Apple right now before all of the new investors start hopping in. Because once August 24th hits, it's most likely going to be going up. Just the pure announcement of the stock split has increased the stock value 7% today. Despite what's been going on in the economy and affecting so many different industries and companies, Apple has proven itself to be able to increase its revenues through the sales of its tablets, computers, and cell phones, and also their other goods, the Apple Pay and the Apple Store. Demand for the iPhones has remained very steady, and we should see more gains for that in the next coming quarter. If you are new to investing anything, this may be the time for you to get invested in a company that's most likely going to continue to see valuable increases in its stock. Again, you may want to buy it sooner rather than later, because once it's open up to the other investors, I really think that that stock is going to increase in value, making it possibly unattainable again, depending on the level of comfort that you have investing $100, $150, $200. Just a couple months ago, Apple was down below $300 per share. Now it's up to $412. So once it goes down to about $100 per share, it's most likely going to be shooting up from there. Now, if you're under 18 years old, you won't be able to set up an account yourself. You're going to need your parents to help you out because you can't form that contract until you're legally an adult. So definitely get with your parents, have them help you set up an account like Ally, where you can easily trade. They've got the phone app. You can go in and you can actually do everything directly on your phone. I think they still have free trades right now. Normally it's about $5 per trade, but right now it's all free, and you can purchase as much Apple as you want for about $400 today, and here in the next few weeks it'll be about $100 a share. If you're over 18, definitely set this up for yourself. Do your own homework and try to figure out if this is a good opportunity for you, and if this is money that you can hold tight and just invest and then just hold. You don't want to be looking at selling this anytime soon. So this money's going to be locked up. When you're investing, always invest for the long term. Never look at the short-term gains. Look at the long-term opportunities that you have here. Again, if you had one of those shares from 1987, it would be worth so much more here in 2020 than it was in the 90s or the early 2000s. So that's just an example of holding tight and just realizing that value when you're in retirement age. If you are investing for short-term gains, meaning you're going to hold this for less than a year, you're going to be paying huge taxes and you're risking so much. This is called day trading, and it is straight gambling. Yes, there are plenty of stories out there about people making a huge amount of money on day trading, but there are way more people losing money day trading than gaining. These people are just paying huge taxes and they're risking so much. The risks are not worth the reward. But if you're looking for a long-term investment, once again, just do your homework. Make sure that Apple is a company that you feel comfortable investing in, and just realize that you should be investing for 5, 10, 15, 20, 30, 40 years before you actually touch this. This is how you build wealth. Once you're closer to retirement, you'll have this portfolio that you've been investing in ever since you were young, like you are possibly right now. So at that point, you can actually live off the interest. Say that you have an account that's grown to $1 million over the past 20, 30, 40 years. If you are investing that properly and you're making about 10% interest, that'll be about $100,000 that you're living on, which I think that most of you could do that in retirement. You want to be invested in the market as long as you possibly can so that you can reap the rewards. That $1 million account that you're thinking about here whenever you're 60 or 65, it could actually be worth $2 million, $3 million, $4, $5 million, depending on how much you're willing to invest right now. Just hold on to your investments. Make sure that you're buying companies that you're interested in, that you're familiar with, that you're able to keep up with. And also, it might be a good idea to look at dividend investments as well. I hope that you've taken some value from this. Definitely read up on Apple. There's all kinds of articles coming out today that you can read up and try to figure out what they're doing and how this is going to play into your own retirement plans. I hope that this video has helped you understand kind of the investment opportunity that we have here, and make sure that you're reading some of those articles about Apple and seeing how their company is changing and how this stock split might invest your current investment or what you could be investing here shortly. I appreciate your time. Thank you very much, and I'll see you in the next video.